Once is happenstance, twice is a coincidence, 3 times is a pattern, 8 times is very substantial, right? Looking back through the last 8 crises, the exact same thing has played out time and again. Over the 60 days that ensue following the initiation of the crisis, Bitcoin is the best performing asset. So that's why I've started calling it chaos insurance. And it's a little bit counterintuitive. And the way that I explain this on Joe Burnett's show is almost like, Bitcoin is on its way to becoming the least correlated asset in history, in capital markets today and forever.
Bitcoin is a currency on the internet.
If you don't trust any other currency, this is where you go.
It's going to outperform everything.
Bitcoin could eventually be worthless.
Every day is a good day to buy Bitcoin.
Bitcoin reached its highest price to date.
Bitcoin hitting a new high. It really has reached escape velocity.
There is no second best.
Who cares about Bitcoin?
It's the only secure database that's ever been invented.
Antisocial.
Bitcoin is the real deal.
Stupid.
Everything is bullish for Bitcoin.
Immoral.
It's going up forever, Laura.
Fix the money, fix the world.
Wyatt and Jordan is a registered investment advisor, and the opinions expressed on the show are their own and do not reflect the opinions of the Silk LLC. Jordan Guest is a CPA, and the opinions expressed on the show are their own and do not reflect the opinions of Trusted CPA or other affiliated firms. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Any statements or opinions are subject to change without notice.
Welcome back to Bitcoin for Financial Services Media. We're joined by a very special guest, dear friend of Joe Consorti. How are you doing, brother?
I'm fantastic. Wyatt, Jordan, great to be chatting with you both today.
Dude,
Joe, it's great to see you. I mean, I think we met in New York last year at the, oh goodness, I'm blanking on it.
The Bitcoin Treasury's Unconference.
Unconference. Yep. So that was good, and I think you had just gotten married. I don't know if you knew you had a baby on the way quite yet, or maybe you did and you weren't sharing quite yet. So good to see you again, man.
Yeah, likewise. It's been a while. Things in Bitcoin have certainly changed. Price was a little bit higher, then it went a little bit lower, and now it's a little bit higher again. So it's basically Bitcoin in a nutshell. But either way, excited to unpack all of it for you today, with you today.
Yeah.
Well, we'll certainly get into that, but one thing I want to start with and get your opinion on is the U.S. military runs a Bitcoin node. Like, are we bullish or what?
That's insane, right? I mean, Jason Lowry has done a really great job at orange pilling the U.S. military. The Bitcoin Policy Institute has done a really great job at dropping orange pills in Washington. Like, I really couldn't be more bullish about it. It's really intriguing. You have war raging in the Middle East, which obviously is not ideal, right? Not only for markets, but more importantly for American life. And, typically during periods like this, there's such a high degree of uncertainty that no asset market does well, particularly Bitcoin. But Bitcoin is just ripping. And so, and a lot of folks are saying this, but if you think about it this way, if Bitcoin cannot get pushed any lower, despite there being an active hot war that the U.S. is involved in, chances are nothing's going to push it lower unless you have like a sudden correlation to one event where everything sells off 50 to 60% because of some major geopolitical shock like COVID or something. So, barring an extreme left tail risk event, it really does seem like the bottom is in for Bitcoin. Now the question becomes like, when are we going to move out of this range? Like that's really anybody's guess. We're trying to push above a couple of key levels right now, but the heart of it is Bitcoin's looking tremendously strong in the face of very, very, very tenuous relations as far as geopolitics are concerned, which you always love to see. And, it's really interesting. OnRamp put out a chart that showed the last 7 major crisis events and how Bitcoin responded within 60 days compared to the S&P 500 and gold. And 7 out of 7 times it was up, and every single time it was the best performing major macro asset relative to everything else. Gold had about a 50% hit rate post-crisis. The S&P 500 had about a 60% hit rate post-crisis. Bitcoin was up more than 10% every single time. And so it just goes to show, like, even though it is this hugely liquidity sensitive vehicle and it will crash unexpectedly at times, it also is the best forward discounting mechanism because that's all that markets are. And so it sort of acts like chaos insurance in a way, because during every single one of these crises, you could interpret none of them lasted very long. None of the major crises that we've had over the last 6 years, barring COVID, lasted very long. Well, I mean, technically, COVID didn't last very long unless you were living in a blue state. But it didn't last very long. And so really, because Bitcoin is so liquid and such a really great forward discounting mechanism, that it sort of priced in the resolution before everything else. And so really it becomes the thing that you want to own during these crises. So I found that interesting, but that's my big long rant about sort of where we are at.
Joe,
Well,
for guys like me, tell me a little bit about your background. I don't actually know. I've seen you on podcasts. I know your name. I met you that one time, but I don't really know kind of your background. It'd be helpful maybe for me and the audience. Just take us through the last how many ever years you want to go back. Just bring us up all up to speed.
For sure, yeah. Well, about a decade ago, I was working at Dunkin Donuts in high school, and now I'm here. And there's a couple of things happened in between. So when I went to college, I initially went for medicine, and then by divine intervention, I decided to move into business instead. At the business school, I wound up meeting a couple of really great lifelong buddies who now work at Bitcoin companies, and they introduced me to Bitcoin. Wasn't something I was particularly interested in during school, in school, and it wasn't something I was particularly interested in. But one thing I was fascinated by was markets, and so the school library at the business school that I was at gave every student access to a Bloomberg terminal for free, and so I immediately got a set of credentials. I started learning how to use it and navigate it and trying to study markets and understand them, because that's what I thought would be really, really useful for me as a freshman. If I could develop that skill, that muscle, it would do really well for me in later years if I wanted to move into banking or another part of finance, what have you. And then COVID hit while we were home from spring break during my freshman year. And I got sent home. Everybody got sent home. We weren't allowed to come back. And so I had a lot of free time on my hands. I decided to run a contracting company with a couple of my buddies. Didn't know how to do any woodworking, didn't know how to paint homes, but we taught ourselves how to do it. I ended up making quite a bit of money that summer when I was 19. And then I needed somewhere to deploy that money, right? As I mentioned, I'd been studying markets a little bit. And so, Bitcoin was sort of top of mind. Again, because this was right around the time that, right around September, October of 2020, when Bitcoin was right back around that 10K level before it took off to 64K the following May. And so I put a pretty sizable amount of what I'd earned into BTC on the hopes that number would go up, and it did. And that's really what got me into Bitcoin in the first place, was just having very little investing experience, coming into a great deal of money, and then just taking the advice of a friend who I really trusted. And that got me hooked. Then I read several different Bitcoin books. I started writing about Bitcoin on Twitter. Nick Bhatia found my account, author of Layered Money. So he brought me on to help him build the Bitcoin Layer, which is a Bitcoin and global macro research firm. From there, I moved over to Theya, which is a Bitcoin self-custody company. Built that for a little while, still building it, and then we decided to build another company with the same team called Horizon, which is a service that allows homeowners across the United States in select states to convert their home's equity, as long as it's a primary or secondary residence, with investment properties coming soon, into Bitcoin without monthly payments, interest charges, or term limits. And so that's sort of the TLDR of it, how I wound up here after all these years.
Dude, that's awesome. I do really appreciate that, because it's just funny. You see a lot of people in the Bitcoin space, and sometimes you see them from afar, and so that's a really good background. I appreciate that. You had some good friends, and you're a little bit younger than I thought you were, honestly. So.
Yeah, 24. I'm turning 25, depending on when you guys upload this. I'm turning 25 next week, actually. My goodness.
Hey, happy birthday, man.
Thank you very much. I appreciate it. My hair is a bit revealing, unfortunately. I think I probably got 2 or 3 years left, and then I'm going to have to look like Wyatt. So I will embrace it fully.
Well, Joe, I am a bald advocate. Whenever you feel like the time is right, I'm here for you. And it was actually a funny story. On my 26th birthday is when I shaved my head.
Phenomenal.
I only remember it because it was my birthday.
It could be coming up. Every other YouTube comment, for every 9 YouTube comments, for every 8 YouTube comments that are like really positive, 1 is calling me Harry Potter, and then 1 is telling me that I should shave my head. So
you can't read the comments.
Exactly. Yeah.
It's so funny. I don't think I've ever watched one of our videos, maybe the very first one, and I definitely don't think I've ever Maybe we don't even have any comments, but I don't read them just in case they're mean.
Yeah.
So, but yeah, that is why it's other main passion. I guess he has three main passions that I know of: Catholicism, Bitcoin, and then he like leads a bald guys club or something. So in his free time.
Fascinating. Bald
That's
guys
true,
club.
yeah.
I'll have to get my membership very soon.
You're always welcome, Joe. You can be a VIP member.
Yeah, he'll waive the fee.
Yeah, exactly. But it is great context. So you mentioned you're interested in studying markets. I just kind of think of you as like a finance guy via watching your context. You kind of touched on it a little bit, but why don't you kind of give us your overview, how you're seeing markets in general, how you're seeing the Bitcoin markets, maybe if you want to rewind about 12 months. I think it's pretty interesting. This actually seems like 10 years ago, but I believe it was around April 25. We had this tariff kerfuffle and scare, and Bitcoin kind of sold off, markets kind of sold off. But there's actually kind of talks about decoupling, where Bitcoin was flat. So talking about those emergencies or cataclysmic events. OnRamp was talking about. So we were starting to see a little sign of Bitcoin decoupling last year compared to traditional capital markets. Maybe we're kind of seeing that now with the geopolitical turmoil happening in the Middle East right now. Why don't you level set with our audience? How are you just seeing things?
Yeah, for sure. It's a really good question. It is interesting because typically, as I mentioned, Bitcoin is thought of as a tech stock and nothing more. It's thought of as, levered QQQ. But it tends to behave much differently, right? If you go through time, Bitcoin is most tightly correlated to the global money supply, whether you're talking about global M1, global M2. Over a long period, you smooth Bitcoin out, 50, 100-week moving average. Typically, it's very tightly correlated to the money supply. So basically, it's this really great liquidity sponge. It is transiently correlated to equities, specifically tech stocks, those higher beta names. But in times of crisis, it tends to outperform. So it's really good that you pointed that out, Wyatt, because about a year and some change ago, April 4th or April 6th, I think, 2025, the tariff tantrum. Trump unveiled sweeping reciprocal tariffs for like every trade partner that we have, and even people that we do very little trade with. And in response, everything sold off. Except for Bitcoin. 1 month after the tariffs, Bitcoin was substantially higher than it was. Very interesting. All of a sudden, you introduce this new payment that needs to be made in order for global trade to take place, and the asset that appreciates is the asset that is geopolitically neutral. That's fascinating. Gold didn't even appreciate. Similarly, wind the clock forward 1 year. This March, or actually late February, the U.S. strikes Iran. I didn't want it to happen. I don't think anybody wanted that to happen whatsoever, left or right. But it happened. And even still, right now, since the strikes on Iran, the NASDAQ and the S&P, they're both up. But it took them more than 5 weeks to actually turn positive. Bitcoin has been rising since the strikes happened. And in fact, it's still the best performing asset since the strikes happened. Gold is down, silver is down. And so, obviously, gold had a parabolic rally. It makes sense that it might be cooling off. It doesn't necessarily mean that it's down because of the Iran war. Similarly, Bitcoin had a massive sell-off, so it doesn't necessarily mean that it's up because of the Iran war. But, once is happenstance, twice is a coincidence, 3 times is a pattern, 8 times is very substantial, right? Looking back through the last 8 crises, the exact same thing has played out time and again. Over the 60 days that ensue following the initiation of the crisis, Bitcoin is the best performing asset. So that's why I've started calling it chaos insurance. And it's a little bit counterintuitive. And the way that I explain this on Joe Burnett's show is almost like, Bitcoin is on its way to becoming the least correlated asset in history, in capital markets today and forever. And Wyatt, you and I have talked about this before. Bitcoin right now is tightly correlated to tech, but its monetary properties allow it to be completely uncorrelated, correlated more so to gold, a risk-off asset that you want to own in good times, but especially in bad ones. And so that's how I would explain the current behavior of BTC. It's becoming uncorrelated to virtually everything. If you have a major geopolitical scare, even though Bitcoin's tightly correlated to liquidity and that geopolitical scare is going to cause liquidity to drop, Bitcoin does well. Why? Because it's geopolitically neutral and capital flies over there. When liquidity is in expansion mode following some sort of major bust, even though other asset markets are extremely afraid, Bitcoin's rising because it's very tightly correlated to global liquidity. So like a lot of things for Bitcoin can be true at once, and that's just Bitcoin fulfilling its destiny of turning into the least correlated asset on Earth, one that you always want to own. So yeah, that's sort of basically what's underway right now in my mind. In a broader macro sense, we have Kevin Warsh. His confirmation hearings are taking place this week. Chances are he's going to be confirmed. We can beat around the bush all we want, but the reality is that he was chosen for this role specifically because he will do Trump's bidding, and Trump wants to lower interest rates. If I was in his position, I would want the exact same thing. No new wars, and the market's doing really well. We're the two things in Trump's corner going into midterms. Now he only has the markets, and so he's doing everything in his power, including but not limited to going on Squawk Box yesterday morning on CNBC to try to pump the markets. And so what he's doing with nominating Kevin Warsh, he's even gone out and said, I would be disappointed in him if he didn't lower interest rates immediately. So we all know the playbook. We all know what's happening. Warsh is going in there. Chances are he's going to lower interest rates. He's going to try to appear measured. He's going to try to feign, sort of this objectivity and this neutrality. But it's very clear what's happening. It's very clear what he's going to be doing. And then you layer in the potential end to the war as well, which now not only Bitcoin, but equities are pricing in. And you sort of have a tremendous backdrop here for Bitcoin to do amazingly into the end of the year. Again, of course, barring left tail risks, and so long as we can continue the steady upward grind that we've had over the last couple of weeks here.
Yeah. I mean, my understanding with the war is that there's a 60-day period from the time the war starts to where the president kind of has unlimited power and then has to, ultimately bring in Congress to kind of keep things moving. I'm just curious if you have any thoughts on, do you see things that are coming out of Washington that are saying, hey, we've got to get this done so that we don't have to pull Congress in because that'll get a little bit messier. Trump wants to end it on a win, right? He doesn't like to lose. Everyone kind of knows that. So do you see an end to the war in sight, and oil futures are baking that in, I guess, and does that, what does that mean for Bitcoin once the war is settled, assuming he can do it quickly?
Mm-hmm. Yeah, so Trump likes to win, and even when he doesn't win, he likes to say that he won, which is something that he and I have in common. So ultimately, I think that what Trump has done here is a really effective job at owning the markets and saying the war is coming to a close, in order to make it so that there wasn't a really deep and devastating sell-off. And now it's actually seemingly underway, at least the wrapping up of the war is. Trump has said that there's an indefinite ceasefire now. We'll see whether or not Israel actually listens, because even last summer, when there was a ceasefire declared in the region, Israel immediately struck Lebanon again. So we'll see if they do that once more this time. But either way, it does seem that the war is actually coming to a close at this point in time, because Trump has said the ceasefire is indefinite. You see oil prices coming down, which of course, futures traders are pricing in a reopening of the Strait of Hormuz. That said, right now the impact of oil. So to answer your question, yes, I do believe the war is actually coming to a close, and chances are it'll happen in the next couple of weeks. I'd say before the end of May at the very latest. We'll have a formal peace agreement. So what's that going to do to Bitcoin? Well, a number of things. We talked a moment ago about how Bitcoin is performing so well despite the war. So war isn't able to push Bitcoin any further down. But it's also, so that tells you, right, this is sort of the only constraint that's holding Bitcoin back, that's keeping investors uncertain from moving into avowedly risk-on territory ahead of Kevin Warsh's nomination. Yet it can't even hold Bitcoin back, right? So once that catalyst is fully removed, once that constraint is fully removed, I would wager Bitcoin moves much higher very quickly. You would see a total re-rating of all asset markets, Bitcoin included. And this is also evidenced by the fact that the stock market has rallied so aggressively. The V-shaped recovery that we've just had from the post-Iran lows to where we are now, above 7,000 on the S&P, was the sharpest V-shaped recovery since 1982. So the sharpest V-shaped recovery in the U.S. stock market in 44 years. That's telling you something. That's telling you that investors are supremely confident that the war is coming to a close. And so they're re-rating higher. Once the war is out of the picture, Bitcoin will re-rate higher too. That said, there is a bit of a risk coming on here. Consumer sentiment, all-time lows. On top of that, inflation expectations continuing to ratchet higher. On top of that, the actual pass-through effect of inflated oil prices as a result of the Strait of Hormuz hasn't necessarily reached the pump, at least not fully. In my area, gas is typically $2.30 a gallon. I just saw $4.30 yesterday for the first time. I'm not in California. In California, I was in San Francisco a few weeks ago. It was, $7. Looking at the gas prices in the area I was staying a couple of weeks ago today, they're now up to like $8, $8.50. So it's beginning to get bad, and it's beginning to pass through to the pump. And obviously, when it comes to consumer inflation expectations, when it comes to consumer sentiment, and just the general health of people across the United States, oil prices matter quite a lot. So the tail risk I'm imagining is if the war doesn't come to a close, then all of a sudden, the Strait of Hormuz remains as closed as it is right now. You see $5 gasoline, $6 gasoline nationwide. That weighs on consumers to such a degree that you actually see an inflationary recession, which leads to deflation, which leads to a massive print of the Federal Reserve buying a whole bunch of assets, re-expanding its balance sheet. And so in my mind, if the war doesn't close up soon, there's a massive tail risk that a massive monetary debasement event could be on the other side of this thing. So, I'm pulling for the war to be over, right? Obviously, not just because I don't want to be involved, but because of what it potentially could mean and the recessionary impacts that could happen if this thing doesn't wind down soon.
Yeah, great job laying that out, Joe. Appreciate that. It's fascinating when you're kind of looking at the macroeconomic, chessboard. I always say I'm a macroeconomic enjoyer. I'm not an expert. I think it's kind of too easy to cherry pick variables and draw the conclusions you want to see. So try to keep it high level. But when we're looking at trends, this is going to be three questions at once. So you mentioned Bitcoin's correlation with tech stocks. That's something that kind of pisses me off because I know we're early and all that stuff. But you're literally trading a decentralized monetary network the same way you trade Salesforce, which to me is insulting. So just kind of one, curious your thoughts there. Two, if the war doesn't end up potential big print from the Feds, what do you think that means for Bitcoin, as you said, kind of this liquidity absorber? And then I forgot my third question, so we can just roll with those two.
Perfect. Yeah, ultimately, I think that... Sorry, what was the first part of the question?
It was Bitcoin's correlation with tech stocks.
Bitcoin's correlation with tech stocks. It makes a lot of sense because the same desks that are trading most of the liquidity with tech are the desks that are trading most of the liquidity with Bitcoin. And also you have to think Bitcoin is...
But do you think that's just a fundamental misunderstanding from their part?
Yeah. In my view, it's a fundamental misunderstanding. They don't understand what they're trading. And the good news is that this has been declining at the margin over time. So if you take a look at the correlation between Bitcoin and the NASDAQ, for example, or Bitcoin and any other individual tech name, the correlation, specifically with the NASDAQ, back a decade ago was something like 0.8. The R squared was 0.8. So extremely strong correlation over any given 30-day period. Now the R square is closer to 0.69. So a reduction of about 11 points there. But they're still somewhat correlated. But the big story there is that at the margin, they're beginning to become less correlated. And that's a good thing. And that's evidence in my mind that the market is coming around to the fact that, look, this is a fundamentally different asset than the equities that we're trading over here, right? Now, granted, they might be just viewing it as, okay, Bitcoin is, it's useful to have because it's a 24/7 market. They might not be sort of no longer trading the two in tandem because they're hardcore Bitcoin maximalists who understand that there's no second best or whatever. They might just be saying, look, this is fundamentally different from equities because of its 24/7 liquidity, its different risk profile, etc. But either way, they're becoming less and less correlated at the margin. In my mind, every single crisis that passes that Bitcoin does exceedingly well during is sort of ringing the alarm for more investors to begin thinking this way and to begin trading Bitcoin this way. So, even though you don't want to see economic recessions and you don't want to see major liquidity events where the Fed has to step in, every single time one of those occurs, and Bitcoin invariably is the best performing asset 30 to 60 days afterward, while everything else is floundering and having a difficult time getting off of its lows, that makes investors notice, not just retail investors, but institutional investors. And so, for me, what it will take is just Bitcoin to continue doing what it has done, which is remaining resilient in the face of crises and being the best performing asset following major liquidity events. And I don't see a world in which that doesn't happen, because just mathematically speaking, Bitcoin is the only absolutely scarce asset out there. And so that's sort of how I view all of these dynamics in tandem with one another. And, eventually, like I'm just viewing that correlation collapsing closer to 0.3 or 0.2 or 0.15. Like very rarely, if ever, will Bitcoin be correlated to equities. And at the same time, I think, Bitcoin's correlation with gold as well, which is also quite strong, will also drift lower. Because during risk-on environments, you'll want to own Bitcoin. You won't necessarily want to own gold. So Bitcoin will do well. That correlation will weaken. And during risk-off times, you'll want to own gold and Bitcoin. You won't want to own equities, right? And so I think over time, as these crises unfold and more investors become aware of the fact that Bitcoin is an asset you want to always be holding due to its extreme resilience, then it just gradually becomes less correlated. And of course, that paired with educating investors on what Bitcoin is, its actual risk profile versus its perceptions. But regardless, we are trending in a very good direction.
Yeah, I think that's correct. And my third question actually is, I'm curious if you've done, postmortem, or if you think it's a worthwhile exercise to kind of look back at, let's call it the last 6 months here for simplicity on, Bitcoin dipping, kind of entering into this bear market, why you think that is. I think the best reason I've heard so far is from James Lavish. He was essentially contributing it to basis trade, Wall Street buying spot, selling futures. Once that spread narrowed, they moved out of their spot positions, and we had like this big sell-off. Like, do you think that's correct? Do you kind of have a different thesis on what happened here over the last 6 months?
Right. I think it had less to do with the basis trade and more so with just a broad de-risking and Bitcoin moving out ahead of the sell-off that happened in equities a couple of months later. The reason I say that is I would put more weight onto James's explanation if it was a Bitcoin native sell-off, if Bitcoin sold off in a vacuum, because then that would tell me that, okay, chances are it is the basis trade, and other assets did very well. That said, if you look at software ETFs, individual software stocks, and some of the more even higher risk U.S. equities, tech and others, they began selling off as well, basically to the day when Bitcoin began selling off on October 6th. So I don't think it was a Bitcoin native sell-off that led to this bear market that we've been in. I think it was a broader de-risking event out ahead of what occurred with U.S. equities. Now, that said, and sort of to tie all of this into the broader macro picture, global liquidity, speaking mostly about credit conditions, so credit availability, the level of interest rates. Right now, if we think of this in terms of cycles, and this comes from Michael Howell, he does really great work over at the Capital Wars Substack. Basically, credit availability is coming in globally. So liquidity conditions are in a downturn, so they are worsening. And as a result, right around the inflection point when liquidity conditions stopped expanding and began turning down, that's when you started to see Bitcoin selling off. And similarly, I believe Bitcoin will find its bottom. Chances are it already has, even though liquidity conditions haven't improved, because of all of the conditions that I laid out earlier, right? Sort of being a hedge against chaos, the Iran war being the last thing that's pushing Bitcoin down, Kevin Warsh being nominated next month, etc. So the sell-off, in my mind, was just a broad-based de-risking that came alongside an inflection downward in global liquidity, credit being less available. That was made worse by the Iran war, at least for other assets. That's what sent them over the edge. But now that Bitcoin is down 45%, it seems to be catching a bid despite global liquidity still declining, which is just a testament to how much people want to own this asset and the very cheap valuations that investors believe Bitcoin is around the $60,000 zone. So to me, it was a broad-based sell-off that Bitcoin just happened to be included in. But the good news is that we seem to have found our footing here. Chances are 60,000 was the floor. Again, aside from any potential major left tail risk scenario, but that's just a given.
If you're a financial professional working with Bitcoin, you know the pain of messy CSVs, broken cost basis, and accounting tools that were never built for this asset. Bitmint fixes that. Bitmint is the Bitcoin native accounting platform built for CPAs, bookkeepers, advisors, miners, and serious Bitcoin investors. You get clean Bitcoin bank statements, reliable cost basis tracking, full reporting, and fiat integration through Plaid. No crypto talk, no workarounds, just proper accounting for the hardest money on earth. Create a free account or book a demo at bitmint.co today. Yeah. No, I mean, that's all really, that all makes a lot of sense to me. I'm kind of curious. It seems like the debasement trade, that language is like making its way into the mainstream. Mm-hmm. Just want to kind of get your thoughts on that layered on top of, it seems like I've seen a few more kind of big brokerage names jump in, whether they now have an ETF, like Morgan Stanley comes to mind, and then them training all their advisors to start selling Bitcoin as basically as a needed part of their portfolio. Are you thinking that kind of word is finally getting out that the dollar is going to shit or to zero, however you want to say it, and everyone's like, hey, maybe these guys who are hard money guys are maybe not so crazy after all, and we should maybe consider their concerns and how we should position those concerns inside of a portfolio more broadly?
For sure. We're going to get demonetized, by the way, guys. We use naughty language. I'm kidding. No,
Sorry,
you're
YouTube.
good. No, you're unreal. Sorry, YouTube. That's a really good question. It's high time that the debasement trade was something that was cited by CNBC and Bloomberg, right? Like, this is something we've been on for ages. It's something that the gold bugs have been on for, 55 years at this point. So kudos to them for being the original Bitcoiners. But
they were real early.
Very early, unbelievably early. And so, it's good that they're finally coming around to it, and it's a testament to really how broken the money is. I think really the tipping point, the straw that broke the camel's back was COVID, because the bifurcation in the U.S. economy between the haves and the have-nots, between the asset holders and those that don't own assets, really accelerated post-COVID. We printed something like, 80% of the U.S. dollars that are in circulation today following COVID. When it actually hit, the S&P 500 was at, like 3,000 or something like that. It crashed. Now it's at 7,000. So it's more than doubled. I might even be too aggressive there. I think maybe it was even lower than 3,000. And so those who owned assets saw them appreciate massively. People committed fraud. People took out, people created fake LLCs to take business loans, forgivable business loans. And so, but at the same time, those who do not have assets have seen their wages go less far every single year, every single day. And so, for me, it's all sort of just come to a head at this point. The civil unrest that we're seeing in this country right now is unlike anything we've seen over the last several decades, and obviously that tends to be the case year after year, but right now it's palpable and it's very different. You sort of have, in the same way that you have this bifurcation between the haves and the have-nots, you also have a tremendous disparity in the way that people feel about the world and their country and their financial situation and their future prospects. You have one cohort of people who is delusionally optimistic and building businesses using AI and trying to become content creators and really hammering the table and pounding the tape as hard as they can to pick themselves, the modern equivalent of picking yourselves up by your bootstraps, as it were. Those same individuals are returning to the faith. You're seeing a major national revival in young people. But then on the other side of the coin, You have people who are huge doomers, people who feel destitute, basically this sort of learned helplessness where despite there being more opportunity than ever, because their wages are not going nearly as far as they once were, people are basically giving up before they've even hit this start line. So that's why I think the debasement trade is in the mainstream media, because the impact of monetary debasement is more acutely felt now than it ever has been before. So that's sort of my thinking there. And then I rambled too long. I totally forgot the second half of your question, Jordan.
I think it was really just about the advisors. I work out of a wealth management office, and even earlier on today, I was on a call with one of their partners as well as Bitwise to try to understand some different hedging strategies and things like that. And it was so interesting to sit there. Of course, I'm not on the investment side. I'm bringing a client into this fold. But it's just so interesting that it's like, oh, wow, like all the advisors are now having to eat their words, maybe go scrub some things they said on Twitter or LinkedIn several years back, and they're having to take this thing seriously now. So I'm just curious because they're all kind of guys, they sell products, they earn fees off of different, products that they sell. And so now it's all of a sudden the overlords have told them, hey, this thing is actually good to go. I was just curious to get your thoughts on that trend generally and what you foresee that doing to Bitcoin price over the course of the next year or so.
For sure. I mean, these markets are huge, right? We're now playing in a massive sandbox that Bitcoin just wasn't a part of previously. If you consider the news and the developments that have just happened over the course of recent weeks, and I'll just judging by the titles of my recent YouTube videos, Charles Schwab, $357 billion potentially across their entire asset base if they get to the 4% allocation that they're recommending for more aggressive portfolios. They just opened spot Bitcoin trading. Obviously, Fidelity has had that for quite some time, but either way, it's a major development for yet another major U.S. financial institution to do that. Michael Saylor, obviously what he's doing at Stretch, but speaking specifically about these wealth management shops, Goldman Sachs, they also just launched a Bitcoin premium income ETF to try to target a very similar market to some of the other covered call ETFs that we've seen. And chances are that's Goldman Sachs just dipping their toe in the water to see what the appetite is like for potentially going out and creating their own spot Bitcoin ETF. Then you've got Morgan Stanley, who just went in and launched their very own Bitcoin ETF at 14 basis points, so undercutting BlackRock. They've got $9 trillion in AUM across their platform. 16,000 advisors globally, I believe, who can now sell this product, and they'll be incentivized to sell this product. Earlier this year as well, or late last year, you also had B of A going out and telling all of its wealth managers, look, begin recommending anywhere from 1% to 4%. So you have all of these major American financial institutions now giving the green light to all of their network of advisors. And not only that, they're building instruments in-house because they want to capture some of the fees. So this is a very welcome development, and it's something that has been a long time coming, right? Because a couple of the major hurdles, right, apart from Bitcoin's risk weighting, according to Basel III, which is currently like 1,300% or something, which precludes a lot of people from holding it. One of the other major roadblocks, if you will, one of the other major hurdles was the fact that it really couldn't be recommended by most wealth managers in the United States unless you wanted to take on extreme reputational risk. But now that Goldman Sachs, Morgan Stanley, Bank of America, Charles Schwab, all of these institutions have given Bitcoin the green light, as it were, now it's normal to begin recommending this to people, and it's not something that you can put you have to put your career on the line for or your reputation on the line for. So I think that's going to lead to massive amounts of inflows. And another thing particularly to consider, if you consider the network of wealth managers and advisors across this country now being given the green light, this suite of products being created for people of all different risk appetites that all have some kind of exposure to Bitcoin, and the fact that we're not even in a bull market yet, right? The groundwork is being laid here. The reason they launched these products is not because of some insatiable demand from retail investors, because Bitcoin is going to the stratosphere. Bitcoin has performed dismally since October as all of these different vehicles have launched. That tells me that they see long-term potential in this asset. And so for me, it's really just like fuel being added to the engine, so that by the time we actually do break out, we actually do enter a bull market, the infrastructure is 3 or 4 times as advanced. It's reaching 2 or 3 times the amount of people that we were back in the last bull market. So really, for me, these are all very positive developments. And I think you guys working in the wealth management space as well, you have your ear to the ground on some of these things, and you've probably seen sort of what I'm laying out here, which is that there seems to be a much bigger appetite. You're probably talking to more people month after month than you probably expected. And these are all really positive developments, because as much as we like to think the world revolves around us as Bitcoiners, it couldn't be a larger world. And up until now, we really haven't been included in it.
Yet, Joe. But yeah, we welcome all our new friends from the TradFi industry getting into Bitcoin. Exactly what Bitcoin Financial Services was started for, bring them in the fold, trying to educate them on how to talk to their clients about Bitcoin, understand the Bitcoin ethos. The second component of BFS is advisors and financial service professionals that are in the fold as being on the forefront of taking advantage of entrepreneurs building exciting products in Bitcoin. So I want to transition to the Horizon side of things now that we have kind of like this excellent overview of the macroeconomic landscape. Joe, something I talk about a lot with my clients is this idea of diversifying within Bitcoin. My clientele is obviously mainly Bitcoiners, and they may have different needs or want exposure to different asset classes, but they're hesitant to get outside of the Bitcoin bubble too much. They would prefer the underlying asset being Bitcoin. And my favorite graphic ever is Jesse Meyer's global store value asset graph, and he just kind of lays out very simply fixed income, equities, real estate, and their global market share ultimately adds up to 900 trillion. And then folks started adding these pumps on these different asset classes into Bitcoin. I think this started with some of Strategy's product releases, and then lo and behold, Joe Consorti added a pump to real estate, and what you guys are doing at Horizon to kind of extract some of that value and get it into Bitcoin. So why don't you kind of, yeah, there we go. That's what I'm talking about. Amazing, right on cue there, Joe. So why don't you kind of walk us through what you're doing and how you're particularly servicing Bitcoiners in Horizon?
This episode is brought to you by Satoshi Pacioli, a full-service accounting and tax firm built for the Bitcoin economy. If you run a Bitcoin business, mine Bitcoin, or invest in it, you need advisors who actually understand how this industry works. Satoshi Pacioli handles bookkeeping, financial reporting, tax compliance, and strategic planning for Bitcoin-focused companies and individuals. They speak the language of Bitcoiners and help you stay compliant while building for the long term. To learn more or book a consultation, visit satoshipacioli.com.
Absolutely. You got it. Wyatt, always on cue. This is my job, man. I'm kidding. This is, so basically, I mean, like, you can define total global wealth by about $1 quadrillion, which is completely obscene. Most of that is just fiat debasement. Most of that is just monetary premium. But if you take a look at each of these different asset classes, as it were, Bitcoin's a commodity, right? Which means that most of the capital locked up in bonds, most of the capital locked up in money markets, most locked up in equities and real estate has no access to Bitcoin, or has no desire to sell in order to purchase Bitcoin, or just has a mandate that precludes them from holding spot Bitcoin. And so you have this really beautiful high growth asset that's designed to hedge against perpetual monetary debasement, but most of global capital cannot access it. Enter Strategy from left field, obviously giving exposure initially for the equity market to purchase BTC through MSTR. Back before we had ETFs, they sort of offered levered Bitcoin exposure, as it were. Now that the ETFs are here, the equity market can purchase Bitcoin through those vehicles. And so that's really settled. But, beyond that, one of the largest markets in the world, the second largest market in the world, is the global fixed income market. So bonds that are a little bit longer dated, longer than 1 year. And Strategy came along and created a suite of preferred stocks for folks of different risk appetites, of different durations, that paid out dividends in order to use the proceeds to invest in Bitcoin. Over Bitcoin's 200-week moving average, the reason this works is because Bitcoin's 200-week moving average, its compound annual growth rate, over any time frame has never dropped below 29%. I just made a tweet a little bit earlier today. And so these preferred instruments offer anywhere from 8 to 12% yield. And so that's something that can be achievable because of Bitcoin's long-term compound annual growth rate. And so Strategy effectively created these pumps, as it were, from global asset markets like bonds, like the money market, like equities into Bitcoin. Now, the largest yet most underserved market in the world as far as Bitcoin is concerned is real estate. It is $370 trillion in size. As of 2025, chances are right now it's much larger. And prior to Horizon, really the only way that real estate capital could get exposure to Bitcoin is through just selling their real estate and buying Bitcoin. And this is a trend that you saw on Twitter and you still see, which is people who own rental properties selling them in order to buy Bitcoin. It sounds phenomenal until you realize that you're giving up your cash flows. Thinking about single-family homes, vacation homes, right? Maybe you'll sell your vacation home to buy Bitcoin. That's great, but now you don't have a home to go to vacation in. Maybe you'll sell your main property to go all in on Bitcoin, but if you've got a family, you can't do that. And so ultimately, a lot of real estate capital, most of it globally, has just been precluded from purchasing Bitcoin. That is until now, right? And so basically what we've done is we have created a solution where rather than mortgaging your house to buy Bitcoin, you can sell a part of your equity in order to buy Bitcoin. And that's it. That's the trade. We get a portion of the future value of the house. The homeowner receives BTC. That's the entire trade. And it's a really beautiful, clean structure. The legal structure for it is a home equity investment. Typically, home equity investments, the way that they're used over very short time frames for like building a deck, for example. And so the financing isn't actually all that great, as far as annual percentage rates are concerned. The idea with HEIs historically has been you take your money out, you redo your floors or something, and then you pay it back. But the benefit of a home equity investment, which is the structure that we use, is that it doesn't come with any monthly payments or interest charges or term limits. Well, at least with us, there's no term limits. At the very least, with other providers, it doesn't come with monthly payments or interest charges. What we decided to do was take the HEI structure, lower the cost of capital so that it's lower than 13%. Which is 40% lower, 60% lower than the lowest that Bitcoin's multi-year compound annual growth rate has ever touched, and make it so that homeowners can sell a chunk of their home's equity, throw it into Bitcoin, forget about it for 2, 3, 4, 5, 10, 20, 30, 50 years, however long in their home. And then when they decide to sell the property, we are owed a share of the proceeds of the home. That's determined at the very front end of the deal. And this entire time, the homeowner's Bitcoin has been appreciating in self-custody. And that's basically that. Similarly to Stretch and Strike and all the other preferred equities from Strategy, the only risk associated with them is obviously corporate risk, but that's the same with any equity. The only major risk associated with them is that Bitcoin underperforms or goes to zero. That's the same with us. So there's no liquidation risk on your property. There's no monthly obligation for homeowners to pay. There is no foreclosure risk. There's no liquidation risk on the Bitcoin. The only risk, just like holding spot Bitcoin, is that it underperforms or goes to zero. So we really think that we've created something novel and unique here. We think among the major Bitcoin products in the space, we have the largest total addressable market because we do. And so we're rapidly working to expand into new states and make more types of properties eligible for this type of deal.
Let me ask you a question, because I ran into a guy last year that had about $10 million worth of California real estate that he wanted to convert all to Bitcoin. He just wanted, his main thing was he's getting older. He didn't want to deal with the rental, properties anymore.
Right.
And basically he was running into the tax component. So that this maybe doesn't solve that. This is more something you do want to continue to hold the real estate, right? You're just trying to take some of the equity value and convert it to Bitcoin. Am I understanding that right?
That's exactly right. And just have it work harder for you, right? Home equity tends to be the largest asset in anyone's portfolio. It tends to be about 55% of the Americans' portfolio. But typically across the country, it's only rising by about 3%. Actually, right now, the Case-Shiller year-over-year home price index is less than 2%. And if you consider the official inflation number is 3%, the unofficial inflation number that all of us know about is 7%, maybe 10%, you're losing really badly. So it's definitely not for that case, right? If you want to offload your real estate, like because of difficulty managing it, by all means. But for folks who are in a similar situation, who are, trying to weigh the cost versus benefit of, man, I like these cash flows, but I hate the fact that my equity just isn't rising quickly enough. Or I love these cash flows, but I hate the fact that the state of California only allows me to increase rent by like 2% every year or something like that, if it's rent controlled. Then Horizon offers an option for them. We don't support investment properties yet, but we are on the cusp of being able to, ideally in the next couple of weeks. But Horizon offers an option for them. Our ideal customer, the folks that we have served more than anybody, are the folks who are living in their forever homes, major Bitcoin bulls, sitting on a lot of equity. So over 50% of their home's current value is in net equity. And, they don't want to have another monthly obligation, right? They pay their mortgage every month. They pay their utilities. They buy food. They pay for their kids' sports. They don't want to have to add in an $800 or $1,000 home equity line of credit payment because they wanted to take one out to buy Bitcoin. So we offer the set it and forget it alternative for the long-term American homeowner to buy Bitcoin using their home's equity without an additional monthly obligation.
And it sounds like, same as a HELOC, it's a loan, so there's no taxable event there.
Correct. It's technically the legal structure, depending on the state that we're operating in. Some places it's considered a loan, some places it's not. But in every state that we operate in, it's not a taxable event, which is nice because our typical draw is like $150,000 to $200,000, which would really stink having to increase your W-2 income by that amount every year.
Yeah, no, 100%. That's awesome, man. I love that. And I know Wyatt and I have talked a lot about that. It's just all the different ways to try to get access to just holding more Bitcoin. So that's killer. It's all the real estate right now is like there is this growing trend of, people are waiting to buy homes because they're overpriced. I guess, do you have any thoughts on that? It sounds like your all's core customer is kind of the older generation. Is there any solve for the disenfranchised younger generation that's trying, and it's okay if the answer for Horizon is not right now. I'm just curious your thoughts. You mentioned just people trying to make it while their real wages are basically being stolen from them. How do you see that kind of working out? Do you see Bitcoin being able to play a role in helping younger families buy homes and live the American dream that we were all promised when we were in elementary school?
Certainly. I think that the solution actually is Bitcoin on two fronts. Number one, because Bitcoin has served as the best sponge for money printing, owning Bitcoin for 5-10 years and regularly allocating it to it rather than allocating to your S&P 500 fund or your NASDAQ fund, whatever, that's going to put you in a position where you could afford a down payment on a home. You might be able to buy a home depending on how much Bitcoin you buy. So number one, it helps folks get a leg up who might feel disenfranchised. Number two, over a long enough time frame, capital moves into assets that are more scarce, right? That are scarcer. And so what do I mean by that? Well, there's scarcity. Scarcity is a spectrum. You can think of it like that. So you have gold, which is relatively scarce. You have real estate, which is slightly less scarce than gold. And then you have Bitcoin, which is more scarce than all of it. What you've seen post-1971 is you saw capital fly out of the dollar and into assets that could hold their value over time that had relative scarcity. So really difficult to produce more of. Gold has and still is difficult, has been and still is difficult to produce more of. So obviously it's been a tremendous store of value post-1971. Real estate has too. Even though technically you could bulldoze the home I'm in and rebuild it, right? And even still in the United States, new neighborhoods are being built all over the place. Maybe not in places like the Northeast and Southern California and what have you, but you go to Florida, there's a brand new neighborhood cropping up every other week. You go to the Midwest, you go to Colorado, there are new neighborhoods being popped up every other week. So we still have plenty of land to build homes on, but basically, after we decoupled from gold, after the dollar decoupled from gold, capital needed a place to go. And so it went to real estate and it went to gold. Fast forward to 2009, now we have a better store of value. And so Bitcoin, slowly but surely, is siphoning away the excess monetary premium that has been trapped in gold and real estate over time. It's a very slow process, but it is underway. And so over a long enough time frame, relative to wages, home prices will actually go down, right? And particularly in Bitcoin terms too. So the idea is that because Bitcoin now exists, a lot of the monetary premium currently embedded in global real estate, which is anywhere from 35 to 50% of home values across the United States, will be siphoned into Bitcoin. Same exact deal with gold. I'm of the belief that like gold and Bitcoin are going to continue doing extremely well. However, Bitcoin will eventually reach parity with and surpass gold. And so both of those things are underway. Those are sort of the two things that can and will continue to help young people get into homes. Of course, apart from actually building homes, but from a monetary perspective, Horizon doesn't have a product in the pipeline for new homeowners. We have a product for existing homeowners, and then Bitcoin in and of itself, in those two functions, can and will continue to help people get into homes.
So you're saying it's a way to orange pill your grandparents and your parents. It's one other way.
Correct.
Because you can tell them, look, you've got all this home equity. You should allocate some of that to Bitcoin.
Exactly. It's interesting. We actually have had sons and daughters and grandsons come to Horizon on behalf of their parent or grandparent and initiate the process and then go all the way to funding, explaining to their grandparent what they were doing. And their grandparent eventually grokking it, or their parent eventually grokking it and understanding what was happening. And ultimately, like, even if you're of the belief that Bitcoin is highly speculative, it is quite dangerous, you don't have to draw a large chunk of your home's net equity into Bitcoin with Horizon. I assume the people listening to the Bitcoin for Financial Services podcast are not skeptical about Bitcoin, or they might be. They might be dipping their toe in the water. But with Horizon, you can choose how much to draw out, right? You can choose 1% of your home's equity thrown into Bitcoin. You can choose 22.5% of your home's equity where we top out in order to put it into Bitcoin. Whatever your risk profile might be, we have something for you. And then the benefit as well, because there is no term limit with Horizon, you can also ride out the bear markets, right? So let's say you were planning on selling your property, October of last year. Then all of a sudden the Bitcoin bear market hits. Oh my goodness, I don't want to have to settle up my Horizon agreement and then be left with less of a net return relative to my Bitcoin. I'm going to ride this out, wait for the next bull market, and then sell my property. So a lot of the way that we've structured it, including the no liquidation risk in the Bitcoin, the no foreclosure risk in the home, we've done that in such a way that it's a great tool for existing Bitcoiners, but also it's a very low risk way for homeowners who are non-Bitcoiners to potentially get into the asset, because it doesn't have all of the risks that are present with traditional, like, Bitcoin-backed loans, for example.
Very nice.
Yeah, no, it's an awesome product, and tip of the cap to you and the team. See you guys grinding frequently to grow this. I think it's awesome. But from a business model perspective, there's no term. Does that put you guys in like a consistent liquidity crunch? Like, you keep having to find dollars to deploy if you're not going to get paid back for 10, 15, 20 years?
Thankfully, it doesn't, for two reasons. Number one, we have an outside financing partner. So they have a revolving credit facility to help facilitate these deals. But the main thing is we have an origination fee up front. Currently, it's 2.99%, which helps satisfy our near-term cash needs. And also, for us, even though we don't have a term limit, technically, most homeowners tend to move within 7 years, right? Widely known. And so the same could be asked of just normal banks that are writing mortgages, right? If you're writing a 30-year mortgage at 2%, you're going to be losing money in real terms for the entire duration that somebody has that mortgage. It behooves you to not do that. However, most homeowners are going to be moving within 7 years. And so for us, we get that origination fee, but also we understand that for every homeowner who decides they're going to stay in their home for 60 years and then pass it down to their kids, during which time we will not be getting paid for 60 years. It'll really screw up our balance of payments. There are going to be 10, 20, or 30 homeowners who decide to move within 10 years or less. So that's how we're viewing it. And then obviously, as a business that's scaling, the revenue from origination fees continues to climb. So we're in a good spot, and we're only scaling.
Yeah, no, that's awesome. It will be hilarious in 60 years' time when you guys have like that one crazy Bitcoiner. It's just like never sold this out. He's just like the outlier.
Bitcoin is $10 million and everybody is sold, but he is not.
Yeah. So maybe
my grandson got me into this. I don't even know how to get it out.
Yeah, you're right. To continue kind of walking through these fees here, I don't know, I'm on the website and the FAQ page here. So why don't you just kind of walk us through what folks can expect? You mentioned you guys are very transparent, upfront with what portion of the home you're selling. Let's wrap our head around that.
For sure. So basically, whatever percentage of the home you sell initially, that increases to a defined upper limit. The formula for the upper limit is 2.25 times that initial percentage. So this is how we achieve no monthly payments and no interest charges. In lieu of traditional interest, effectively what you're doing is you're selling us a share of your home's future value. So let's say, just for easy numbers' sake, you own a $1 million home. You decide to swap out 10% of the equity in order to purchase Bitcoin. We get a 10% stake in the property, either a first or second agreement lien position, depending on whether or not the homeowner has an existing mortgage. In exchange, they receive $100,000 tax-free, wired to their Bitcoin exchange of choice to go and purchase BTC. That's that. That's the entire transaction. Over the first 8 years of the agreement, our share is going to grow from 10% to an upper limit of 22.5%, which again is defined by initial percentage multiplied by 2.25. So for instance, year 2, our stake might be 12.5%. Year 4, our stake might be 16%. Year 6, it might be 20%. Year 8, it'll be 22.5%. Of course, the other assumption is that over that period of time, the home is going to be appreciating by about 3% annually. So the home may be worth 10 years' time, might be worth like $1.2 million. So basically, the payoff would be initially you're selling us $100,000 stake in the property, which represents 10%. Over those first 8 years, the property rises to, let's say, $1.2 million. We're owed 22.5% of a $1.2 million home. The other constraint on the payoff cost, I like talking about the cost first because then getting into the Bitcoin, it gets much more exciting. We also have a constraint on the payoff cost where if on an annualized basis, what any customer is paying exceeds 12.99%, then they don't pay a dime over it. So they'll always be paying the lesser of our share in the property or 12.99% annualized. Now, it seems extremely high, but the reason we chose 12.99% is, number one, it's upwards of 800 basis points lower than the maximum cost of other home equity investment providers. So I mentioned that other home equity investment companies are more so tailored for near-term funding needs, like building a deck, fixing your floor, whatever. We wanted to tailor this for long-term investing. And so the reason we chose 12.99 as our upper limit, number one, capital constraints. It's what our capital provider would agree to. And number two, there has been no multi-year period over Bitcoin's life where it has been lower than 18%. So we left a 500 basis point gap between, between the maximum funding cost and Bitcoin's worst performance. So basically, that's the way that the contract payoff works. The benefit of this as well is that in the event the home stays flat, the homeowner owes less. And the other benefit of this is that I mentioned this is a product for longer term homeowners, forever homeowners. Because our share in the property caps out at year 8, the annualized funding cost decreases every single year following year 8. So for instance, over 30 years, you can achieve like sub 6% financing effectively. Because our share is capped out at year 8, the APR effectively for every year after that trends down. So we wanted to structure it in such a way where it sort of lines up duration-wise with Bitcoiners' time preferences, and we feel we've achieved that. So on the other end of it, the more exciting part, the Bitcoin component of it, I mentioned the only risks with Horizon are that Bitcoin underperforms or goes to zero. So your minimum, Bitcoin appreciation rate, if you were to stay in Horizon for 30 years, assuming the national average home growth rate would be 6%, right? So as long as Bitcoin does 6%, you're at break even. If Bitcoin exceeds 12.99% over the first several years, you're cooking, and you're cooking with gas. And then as time goes on, let's say Bitcoin does 20% a year for 20 years, after year 8, your cost of capital on an annualized basis begins declining. All of a sudden, you have this asset that's been compounding 20% a year for 20 years on one side, and on the other side of the equation, you're owing roughly 8% APY or 8.5% APY. So really, so long as you're a Bitcoin bull and you're staying in your home for an extended period of time, it becomes a really, really great deal. It's not ideal for homeowners who are in their home for a shorter period of time because it gives Bitcoin less time to compound and really work for them relative to what they owe. And number two, if a homeowner wants to draw more than 22.2% of their home's net equity, then there are better places that they can go. So for instance, the $1 million home example, the maximum they'd be able to draw out with us if they own the home free and clear would be $225,000. That's it. There are HELOCs that are available where homeowners can get up to 80%. So someone can go get 800 grand out of their property to buy Bitcoin. If they're looking for a massive chunk of their net equity, over 65% LTV, there are other places to go, right? So we're not ideal for everyone, but for that select homeowner who's in their forever property and they're a huge Bitcoin bull and they don't want the extra monthly obligation, we're a really, really neat tool for them.
Absolutely. No, that's fantastic. Thank you for laying that out. And have you guys integrated Theya into like the back end of this? Like, do you talk about cold storage custody of the Bitcoin? Is that kind of like the next progression with homeowners that utilize your product?
Mm-hmm. It's a good question. So not formally, obviously running both companies, I do mention Theya as an option for self-custody if they want to do it. And we have had some homeowners use it. But, we really give homeowners the freedom to custody the Bitcoin however they like. Most of the folks that are coming to us, they prefer to hold their Bitcoin on an exchange or in an ETF, right? A lot of folks are buying in like an IRA and they want the cash wired to their individual retirement account and passively allocate over time, or throw it into an ETF where they hold all the rest of their Bitcoin. So it's an option, but we don't really push it on folks.
Understood. Yeah, that's interesting. Yeah, I was curious. Okay, we got the Bitcoin. Now what kind of sophistication of Bitcoin knowledge, the Horizon client is. So appreciate the insight there, Joe.
Absolutely, man.
Right on. Well, this is awesome. How long has this been live?
Yeah, so we have been around since last year. We're coming up on 1 year now. We launched May 5th, 2025, just before the last Bitcoin conference. Yeah.
Yeah, that's super exciting. Good on you guys. What's the uptake been, or the reception to the rollout?
For sure. I mean, it's been great so far. Every time we launch a new suite of states, we have a huge swath of customers who've been on our wait list waiting for it. Currently, we're available in 21 U.S. states plus Washington, D.C. And there's such vehement demand for expansion. Like Texas, people will not stop asking about Texas. That's a tough one. New York. Obviously, New York is infamously difficult. So, there's appetite for this all over the country, and we're just really, really happy with the way that it's shaken out so far. We've helped hundreds of homeowners with this, and it's a really fun business to be in.
Your wealth deserves intention. Basilic Financial is a Bitcoin-focused wealth management firm built to help our clients find balance between money and meaning. We integrate sound money strategies across 4 distinct personalized services: financial planning, individual wealth management, retirement services for SMBs, and Bitcoin financial services. Your prosperity, your purpose, intentionally guided at Basilic Financial. Visit our website at basilic.io to schedule a free consultation.
Oh, I bet. I was on the website preparing for the call today and have a client in Texas I've been thinking about utilizing this for, and lo and behold, still not on there.
Unfortunately, yeah, it's really tough. The state of Texas is just really difficult for any sort of home equity product, whether it's a home equity line of credit, what we're doing. So it's just a function of state legislation. Like, they're really difficult. And then with New York, it's impossible to do like Bitcoin companies. Like the BIT license, it takes years and years and years and years and years to do. So Texas is probably a little bit closer, but New York is probably a ways away, unfortunately. So if you're in either one of those states and you want to use Horizon, you should move.
That's awesome. You kind of back to my initial question when we started talking about Horizon and the diversification within Bitcoin. It's amazing what you guys have been able to achieve in such a short amount of time. What are your maybe official growth plans, or just any opining you want to do about the further development of Bitcoin products, investment products, either building on real estate or just any general thoughts you want to share with the audience?
For sure. I mean, yeah, our terminal growth goal is to be in every state in the United States and then look elsewhere, right? Like, real estate is in the US, residential real estate is a $60 trillion market. Home equity is a $37 trillion market here. And there are trillions more globally, right? We want to be in residential here in the US. We want to be in all types of residential. We want to be in commercial, and then we want to expand elsewhere, right? So it's about new types of properties eligible, new states being available, and then beyond that, new products, right? So, Right now we have the product. We have two versions of the current product. One is slightly more expensive, but it allows folks to draw even more equity from their home, up to 30%. We're trying to create a lower cost variant as well that comes with a lower maximum annualized payoff cost. We're trying to create even beyond home equity investments, try other sorts of financing mechanisms that homeowners can use existing equity for different things. So a lot is in the pipeline, namely state expansion and new eligibility for different types of properties. Ball's sort of up in the air on every single one of those. We're sort of working on all of them in tandem, but the broader picture is this, real estate is actively being demonetized by Bitcoin, and we exist at the intersection of real estate and Bitcoin, right? So we help homeowners capitalize on that trend that is already underway. Real estate is being demonetized in real terms, and we help homeowners get ahead of that by converting their equity into Bitcoin before, in US dollar terms, their home doesn't go very far.
Totally. That's beautiful. On that vein, at the intersection of Bitcoin and real estate, you don't have to specifically comment on them if you don't like, but I was curious, it was probably about this time like a year ago. I feel like I haven't heard anything from them in forever, but the People's Reserve was planning to roll out. I don't even know if it's live. This Bitcoin mortgage, they were kind of branding it as like a self-repaying mortgage, which, the fine print on that might be a little fuzzy, but just in general, if you want to keep it to this idea of a dual collateralized mortgage, some Bitcoin, some real estate. Do you have any just kind of general thoughts on that? Do you think the market as a whole is ready for a product like that? Do you think there's enough Bitcoiners that would want to utilize something like that?
Oh, 100%. Absolutely. I know CJ, he's down in Naples. He's cooking with People's Reserve. I don't know if they're quite live yet, but once they are, I think the product's going to be huge. This notion of being able to allocate, the Dave Ramseys of the world have always said get a 30-year mortgage, pay it down in 15, or get a 15-year mortgage, whatever. And everybody says they're going to do that, then they don't wind up doing it. Imagine instead of allocating an extra $100 a month to your mortgage payment, you allocate an extra $100, $200, $300, $500 to a Bitcoin escrow, effectively. Then the growth of the Bitcoin over time will pay down your mortgage 5, 10, 15 years early, 20 years early. I think this is a product that there's major appetite for. And that plus being able to get financing for my down payment using my Bitcoin, I would do that in a heartbeat, right? Because effectively what you'd be doing is, you wouldn't have to sell any of your stack in order to get into the property. And then in addition to paying your mortgage every month, you would be, there would be minimal opportunity cost because you'd also be allocating to, or less opportunity cost because you'd also be allocating to effectively your own home Bitcoin reserve. So, it's a product that I definitely believe there's a huge amount of appetite for, not just for Bitcoiners, but also for homeowners. I mean, if you told homeowners, look, you don't like this 30-year mortgage, using the power of this one asset, allocating an extra $100, $150, $200 a month to your payment, you could shave your mortgage lifespan in half. And it's, make it a small enough payment where it's, not the end of the world if the asset goes to zero, but large enough to, materially make a dent and shave years off their mortgage. I think it's a tremendous product, and I think there will be a great deal of appetite for it once they go live.
Oh, yeah, that's exciting.
Sorry about that, guys. I'm running some Wi-Fi issues. But this has been super interesting. I mean, how do people find you all if they want to, unless you guys have already covered that, if they wanted to engage with the product, engage with you, where do they go?
Absolutely. Well, Wyatt, Jordan, thank you guys so much for having me on. I appreciate it. If you want to find more about Horizon, just go to joinhorizon.com. If you want to find more of my work, if you're watching this on Twitter, you can just search Joe Consorti. If you're watching it on YouTube, just search Joe Consorti and click the one that looks legitimate. It's just my name, @Joe Consorti. You can follow my work there.
That's how you know you've made it, when you've got copycats that are trying to impersonate you.
That's right. It recently
so you'll
started
never
on
ask
YouTube.
somebody to send you Bitcoin.
Yeah. No, I will never DM you. I will never ask anyone to send me any Bitcoin. I won't ask you for any of that. So be wary of scammers because they're all over the place. I have high school friends messaging me and saying, hey, is this you? And it's Joe Consorti Private, which is an Instagram that I do not have. So be on the lookout. I'll never message you. Stay safe out there.
Cool. Thanks so much for coming on, Joe. This has been great.
Thank you.
Thanks, Joe. This is awesome.
All right. Till next time.
We appreciate you joining us.
If you want to help build the future of Bitcoin and financial services, hit subscribe, leave a review, sign up for our newsletter, and share this with someone in your network who's integrating Bitcoin into their practice. The more professionals we reach, the better served our clients are. Stay sharp, stay sovereign, keep leading from the front.